Now in today's video, I'm going to show you guys how I change my levels. And by levels, I am referring to the previous and recent higher day levels and as to why they are important and why I switch them every day. So what I do is I go to my trading view, which I already have here. And pretty much what happens is previous high of day, which was Thursdays, now becomes today, Friday's recent higher days. And then the recent higher day becomes today's Monday recent higher day, which will be somewhere around over here. And as to why these levels play a key play a key role to my trading, to my charts, and as to why I use them. Um, let's just start switching these things up now. So let's go here. Recent high of day, which is on this point over here. We unlock it. Okay, we move that around. Let's move that out the way. We grab the previous high of day level and we drag it down over here. So now previous high of day now becomes Friday's high of day. Now we have to pinpoint them exactly wick to wick. I like to use the magnifying tool here on Top Step X platform. Do this. Pardon the background noise, guys. I do live in the city, so you're gonna hear a lot of that. Okay, that is set. Boom. So now, like I said, previous high of day now becomes Friday's recent high of day. And now once we do that, we do it to a trading view, so we could just be set, all accordingly. Excuse me. That's done. Done. Okay. We just adjusted. Once that's done, then we do the recent and previous low of day. Same exact thing, like I said. Same exact thing. Okay, so that's that. We lock it. Now let's go to the recent high day. So it should be over here. So these colors are pretty much, these colors right here represent the market. This is the Oz, this is the Asian market, this is the London market, and this is the pre-New York and then the New York opening market, the range. Okay, like I said, let's set that accordingly. Over here, this is the recent high of day. You have to put the pinpoint wick to wick. Okay, done. We zoom out, double click just to get the coordinates of it. Double click here. What you do to one, you gotta do to the other side. All right, we got that. Now we just make sure we align it accordingly. Done. Okay. Now let's do the lows of days. So like I said, so recent. So the previous low of day for Thursday is now going to be the recent low of day for Friday. So this marker here, copy that price, unlock it, move that up here for now, double click this, set the sub price, done, unlock. Excuse me guys, sorry about that. Keep adjusting it so we get there. Boom, done, lock. Now that we have that set, let's do it on TradingView 2 as well. Unlock. Recent low of day will be here clearly. So now previous low of day becomes Friday's low of day. And recent low of day, which will be for today, Monday, obviously. We keep adjusting that so we get it. Boom, done, lock it. Now this one, you Gonna use the magnifying tool for this. Like I said, make sure it's accordingly wick to wick. And there it is. Excuse me. Double click again. Copy the price. Make sure we lock that. And whoa, what's going on here? No. Why? Okay. Okay. Anyways, don't know why I did that, but let's just adjust this anyways. So recent low of day will be here. Oh shoot, I did have this already correct. No. Sorry guys. Okay, that's done. So now recent low of day, which will be all the way over here. Okay. So notice how these levels, right? Once I'm done, I'll explain to you why these are very important. So now notice how these previous and recent highs and lows of day coincide with almost with the levels that I have already. If you watched my video, part one of my levels and chart analysis, you understand. I definitely will recommend for you guys to watch that video if you guys want to understand more as to why I do this. So as you noticed, so far in today's price action, this is the opening range from Sunday. This is all the price action. Clearly, notice how price has been raging within this opening orb of the evening, and then now we have the New York open here and established the range for today's market. And notice how price pretty much remained within that range all throughout. So these are key important levels here, because now these levels could represent a lot of things. What it does for us traders is that these levels also become targets for us to aim at for either potential take profit trades, entries, excuse me, or even exits. But now also this is how you could start like making an analysis and be like, what's going on? So this is right now the current market. Right now it's 3:49 p.m. Market should be closing around 5 p.m. I think things will start slowing down around 4 o'clock. So now let's just say markets are closed and it's already going to be 6. Markets are going to reopen for the Aussie market. We could use these ranges, these levels here, as to where market wants to go. You notice here the opening gap has been filled, a perfect rejection of this level here, and then we had a perfect rebound going up, and look where it price respected. Here it respected the high opening range of Sunday's opening. Clearly it's a nice level of resistance. Now what's gonna happen is, let's say market closes, we could use these ranges, the previous and the highs or lows of days, as markers as to where market direction could possibly go. Meaning, let's say the evening market, opens, it retests this level one more time, because as you can see, it's been tested several times. It's been only broken past 1, 2, 3, 4, and almost 5 over here. So that means that, let's say market opens, breaks past this level, retests, and it could potentially even come back here. Let me actually do this all over again, because just to show you guys. So let's say the evening market, Aussie market opens up, retests this level one more time. It could potentially come back down, ranging here, then come back up. It could if it breaks past the recent high of day of Monday, then now we have the momentum going up. Then could come back down, break this, retest this, you use this one as a level of support, and continue to go higher to the next level. And or what could happen is, notice how these levels are pretty tight. That's because the market has been ranging within this particular zone here. There's something going on here that market has been ranging within that frame, so now I'm gonna jump into the 1 hour time frame and pretty much just show you guys. See this? You see this right here? These zones. Um, let's see. Give me 1 second, guys. Okay, so look at this. Chop action here, very choppy price action here. Remember, we're looking at that 1 hour time frame, meaning that each candle represents 1 hour. Look, another rangy, choppy market, you know. Then another one over here too as well, and then this current market, another one here. So let's keep looking further more to the left. Let's see what we find. So okay, nothing so far. Let me see. No, we can't really zoom out all the way because this is just, then we're just looking too far in the past, which is nothing wrong with that, but look at that. There's another one here. So this right here, what tells us is that this is a lot of range bound market zone, meaning that market is looking for a direction up to where to break, where it wants to go. So this is the 4 hour time frame. Just had to zoom out just so we could see, so we could get a more understanding. Notice it was ranging within this zone for how many days? From August 5th all the way to August 12th. So pretty much almost a week. A week. Same thing here. Let's see. Let's see how long has it been ranging within that particular zone. So this is 4 hours. April 2nd all the way to here. We finally got that break. April 4th. So that's 2 days. Same thing here. April 9th, finally broke down over here. 1 day, not here. April 10th, finally broke here. 1 day, here as well. So you see what I'm trying to say. So now Mark is looking for a direction of where it wants to go. So now these are the levels. These are how I use my levels, and I could use them as targets. So let's go back. Look at this huge breakdown. So the fact that this is breaking down all the way down here. Now let's just say that the Aussie market opens. It's now 6 p.m. Market's opened, and now let's say the continuation is down, is bear. So now we could use these as a form of direction. Fine. Price opens, market opens, shoots down, breaks past this level. It could continue to favor the momentum down here, and then maybe retest this level, because this level has been tested how many times so far? Just one. And then we might have a reversal move to the upside, hit this zone here. Remember, there's a level here too as well that we marked, and the previous high day level is there. Could come back down to retest this, to look for support here, and then break up, continue higher throughout overnight. Comes London. London could just probably grab and sweep this one more time, retest this, and then shoot higher. And then the New York market could happen. New York market could come back down here. Could retest this level again, come back down, and then go even more higher. So this is how I like to use these zones. These are just examples of market could give you a sense of the direction of where it wants to go. So also what I like here on this 5-minute time frame, I like how this is closing up. It's an ugly one, but this is a left shoulder, the neck of the left shoulder. This is the head. This is the neckline of the right shoulder. This could potentially be the right shoulder creating, because if you look to the left, look at that. They almost coincide with each other, and then maybe we could start having a rebound back up, creating the right shoulder. This candlestick pattern represents a change of direction. Instead of now, it was what was once bear, now it's moving up. So these are things to look at, and and what is it on candlestick patterns. But again, I mean, this is just a 5 minute time frame. You're gonna find a lot of those in very small time frames. You could easily, if you want to learn how to spot them, look at them in the higher time frames, in the 4 hour time frames, 1 hour time frames, daily time frames too as well. Those are the more concrete patterns, more like the telltale signs that where market direction wants to go. A quick example, look at the 4 hour time frame. What do we see here? We see a double bottom candlestick pattern. Huge drop, rejection 1, neckline, huge drop again, rejection 2, and continuation, a reversal continuation to the upside. Boom, what's going on here? It tried to retest the neckline. Look at this level that we placed. What do you know? There's a level here coincides with the movement. Market direction is going back up now. Now it's looking like it's going back down, trying to either maybe retest one of these levels, either this level here or this one here, or even the previous lower day level, and then we could have a continuation moving to the upside to fill in. Ideally, I would love to see this order block being tested one more time because it's been tested once, 2 times, and that's it. So that'll be nice. If it tests here, we might probably actually catch a reversal move back to the downside, testing this level for support, and then continuation going higher, and maybe have new higher highs again, which has been quite a long time. But anything can happen in the markets. We don't know because remember, market is driven by news, price action, and volume. So anything can happen. But there you have it, guys. That's how I place my levels. That's how I do my analysis. And once again, guys, as always, don't forget to hit the like button, subscribe, share with your friends, family, your guru traders, anyone. Don't forget to comment, share some knowledge. Go for it, man. Again, I'm just a year in trading, still learning. Been paid out twice so far, third time already because I already requested it, so I'm waiting for that payout to hit my bank. But yeah, man, hit the like, subscribe, peace.